Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Welcome back to the channel, traders. Ever wondered what makes a stock hard to borrow and why that can sometimes ignite explosive price moves? Today, we're putting a specific microcap on our spotlight, WLDS, or Wearable Devices Limited. This isn't just about a high-growth tech company, it's about a stock exhibiting some extreme borrow costs that are grabbing our attention. We're going to break down exactly why WLDS is appearing on our hard-to-borrow screener and what it could mean for its future price action. Wearable Devices Limited WLDS operates in the exciting technology and consumer electronics sector. They are innovators developing a non-invasive neural input interface. Imagine controlling your digital devices with subtle, touchless finger movements. Their modular development kits are designed to do just that, enabling seamless control of everything from consumer electronics to smartwatches. This is a small company with a market capitalization of just $7.08 million, placing it firmly in the microcap category. Looking at its recent price action, WLDS has been on a wild ride. Today, it's down 14.56%. However, zoom out a bit, over the last 5 days, WLDS is still up 12.58%, and incredibly, over the last 30 days, the stock has surged a staggering 116.97%. This kind of momentum is significant for any stock, let alone one with such unique borrow dynamics. Volume-wise, today we've seen 684,100 shares traded, which is notably lower than its 30-day average volume of 3,117,013 shares, giving it a relative volume of just 0.2x average today. What is cost to borrow and why it matters? So, what does it mean when a stock is hard to borrow? At its core, when you want to short sell a stock, you first have to borrow shares. The cost to borrow, or CTB, is simply the fee you pay to do that. Think of it like renting a car. You pay a daily or annual rate. For short sellers, this fee is paid to the broker who locates the shares. When a stock CTB starts climbing into the hundreds or even thousands of percent annualized, it means it's incredibly expensive to maintain a short position. Why annualized? It's simply how the rate is quoted, but a 1000% annualized fee means that if you held that short position for a full year, you would pay 10 times the share price and fees alone. High CTB rates indicate intense demand to short a stock, or, more often, a severely limited supply of shares available to borrow. Why this stock is hard to borrow right now. Now let's talk about WLDS specifically. This stock appeared on our screener because its annualized cost to borrow fee is currently an astronomical 10.03%. Highlight number on screen, this is not a typo. Over 1000% annualized. This means it's becoming extremely costly for anyone betting against Wearable Devices Limited to maintain their short positions. The estimated float for WLDS is also very small, at just 1.9 million shares. A small float means that even a relatively small amount of buying or selling pressure can have a magnified impact on the share price. The shares currently available to borrow are unknown, but given that CTB, it's safe to assume they are scarce. Our internal composite squeeze score, which factors in CTB, borrow supply, float, and price momentum, gives WLDS a score of 53.0. While not the highest score we've ever seen, it's firmly in a range that suggests elevated risk for short sellers, especially with such extreme borrow fees. It's crucial to remember, however, that a high CTB does not guarantee a squeeze. It can also indicate that short sellers have very high conviction in their thesis and are willing to pay a premium to stay short. Squeeze mechanics explained. So, how does a short squeeze actually work, particularly in a stock like WLDS with its specific characteristics? Imagine this: the stock price starts to rise, perhaps fueled by positive news or increased buying interest. For short sellers, this is a double whammy. They're losing money on their position as the price goes up, and they are also racking up those insane 10.03.7% borrow fees daily. If the number of shares available to borrow continues to shrink, it creates a supply crunch. Eventually, some short sellers will decide the pain isn't worth it. They start to cover their positions, which means they have to buy back shares in the open market to return the borrowed ones. This act of buying, however, further drives up the price, forcing more short sellers to cover, creating a rapid feedback loop. This intense buying pressure, combined with a limited float of 1.9 million shares for WLDS, is the engine of a short squeeze. Dilution risk check. One critical factor that can make or break short squeeze thesis, even with high CTB, is dilution risk. Dilution occurs when a company issues new shares, which increases the total supply of shares outstanding. This can effectively provide more shares for short sellers to cover their positions with, or it can simply depress the share price by increasing the float, potentially negating any squeeze momentum. For WLDS, we performed a thorough check for recent dilutive SEC filings like SMINS1, SMINS3, or 424B over the last 90 days, and we found no such filings. This is a positive sign, as the absence of recent dilution means the company isn't currently adding shares to the market that could ease the pressure on short sellers or dilute existing shareholders. Recent reverse split watch. Another important recent development for WLDS is its reverse stock split. Wearable Devices Limited executed a 1-for-3 reverse split on June 22, 2026, which was 49 days ago. A reverse split reduces the total number of outstanding shares and, in turn, increases the price per share proportionally. This effectively reduces the float. Historically, many microcap stocks tend to see renewed volatility or even a price pop within about a month after a reverse split, as the reset share price and reduced float can attract new attention or amplify existing dynamics. While WLDS's reverse split was 49 days ago, slightly outside that typical 1-month window, it's still a factor that contributes to the current low float and potential for magnified price movements. Remember, this is an observed pattern in some microcap names, not a guarantee of future performance. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For WLDS, with its current tenor 3.7% cost to borrow, tiny 1.9 million share float, and recent 116.97% 30-day price surge, here's what we'd be watching closely. Keep an eye on the cost to borrow fee itself. Does it remain this extremely high, or does it climb even further? Also, monitoring the number of shares available to borrow is crucial. A continued decrease suggests increasing pressure. Pay attention to daily volume. While today's volume is lower, a significant increase in volume on strong-up days could signal intensifying buying pressure. The combination of an innovative technology company, a small market cap, and these extreme borrow dynamics makes WLDS a fascinating case study in the current market. WLDS, Wearable Devices Limited, is a prime example of a stock showing extreme hard-to-borrow characteristics, driven by its astronomical 3.7% cost to borrow and small estimated float. While its innovative mudra technology is compelling, the current setup points to significant short seller discomfort, especially given its impressive 116.97% run in the last 30 days and the absence of recent dilution. Remember, microcap stocks like WLDS are inherently volatile and carry significant risks. This analysis is purely for educational purposes, highlighting how these unique market dynamics can play out. If you found this deep dive into WLDS insightful, please like this video, subscribe to our channel for more hard-to-borrow stock education, and let us know in the comments if there are other stocks you'd like us to analyze. Thanks for watching, and happy trading!